Good morning, everyone, and welcome to Tuesday, May 18th, the On Time on Target morning show, where we're coming to you live from Las Vegas. You can see it in the background there. Actually, this is the 27th floor of the Luxor, and we leave today to go back home after the big volleyball tournament. If you didn't catch the results of that, went 7-0 into the last day, where we got into the gold bracket, where you had to win 4 games in a row to take home the first place. We ended up going 1-1 on the last day, so 8-1 for my oldest child there. Overall, pretty good. Ended up tied for 5th place out of 138 teams. So certainly very proud of Allison and her teammates' accomplishments there. Also, since the tournament ended early yesterday, got to do a bunch of fun things in Las Vegas. If you haven't ever taken the helicopter tour, all in, it runs you probably $150 or so by the time you get the helicopter per person. By the time you get the helicopter, pay that fee, and then you have to Uber out to the airport to actually get on board. And of course, you have to buy the picture afterwards on the plaque. So all in about $150 a person. So a little on the expensive side, but it's a lot of fun and definitely something to do once for folks that have not done that. All right, back to investing today. If you've seen the futures, they're in the green. We had a small red day yesterday, nothing amazing. But today, a lot of optimism in the air because of the retailers. When you look at who had earnings last night that were amazing, or this morning, more likely for the two I'm specifically going to talk about, is Home Depot and Walmart. So some of the biggest names out there. There's a lot of positivity behind these names, not only from the numbers that they just reported, but also now masks are coming off and more people are getting out. Kind of that economic explosion scenario that we've really been expecting is now just really going to benefit the retailers out there. So we'll talk about those two, as well as Costco, Lululemon. Kind of that's I'm not necessarily endorsing Lulu. I'm just saying as an example of a specific retailer, if you want to kind of get into the specifics there. Also, we'll talk about Amazon, right? Amazon. Amazon. Of course, that's going to be a good investment in, my opinion. And then we'll also talk about iBuy. There's also ETFs that talk about retail buying out there. So that's what we have for today. We're also going to clear up for our question of the day is the Secure Act brought out the 10-year rule for inherited IRAs. So for those that end up with inheriting IRAs, the rules have all changed, right? So you really need to understand what that's about. We're going to talk into that after we get the market open there. All right, with that, let's go ahead and get started. Yes, good comment there, Apex. Certainly, a lot of us spend a lot of money at the places that I was talking about there earlier. And AT&T is another name that we're going to talk about. Obviously, that's a short of a different story that we're going to talk about once we get to the market open. All right, welcome to the briefing again. Make sure you have your chat window set up and your Q&A window set up appropriately, and make sure to ask questions along the way. Standard disclaimer applies. It's a financial education presentation, so you have to do your own due diligence before acting upon anything here this morning. Full disclaimer information is available at OTOTnow.com. All right, Tuesday, May 18th. Why is May 18th a big deal for a lot of people this year? Yeah, it's the day after tax day, so hopefully you were not on your TurboTax last night all the way till 11:59 p.m. trying to get the final touches done. If you're in Texas, again, we have till June 15th, so you get a little bit of an extension there automatically that you don't have to file for. You just simply do it. So a lot of folks written yesterday, what really the downside of this whole, and that's why when you see folks like myself, CFPs kind of cringe. CPAs actually just are like, when they move the date a month, what does that do? That brings a month more of pain, right? All the same conversations that happen every year, it seems, during as tax closeout comes out, all the conversations about IRAs and 401ks and funding and all of that stuff, that all now gets delayed a month. So it's kind of like this big burden off your shoulders when you finally can put that stuff behind you for good. And interestingly enough, I have a local CPA that I work with here in Austin that was gone. He scheduled his personal vacation, obviously like April 20th, for a month, month sabbatical where he's not doing anything with any clients. Well, that's kind of funny because now it doesn't work, because that was like, he's not around at the core, the core deal. So he sent a thing as all his clients. It's like, we're either filing by the 15th of April or I'm going to have to hand you off because he's not going to be around. So it's kind of an interesting dynamic there. But tax day is behind us unless you filed an extension and all the other tax rules. This is the one year where you kind of have to look up everything, right? It's the whole what changed, what didn't, did the month, those of us that have to file quarterly, did those rules change? No, they didn't. But others rules did. So you kind of have to get in there and investigate all this stuff, which is not a lot of fun. All right, mission objective today: grow our money, protect our money, live off our money. We're talking about growing our money. And this is more of a grow slowly. Tech is the grow fast. Crypto is the let's make 100% in a day, sort of in investing, if you will, more speculation, right? But investing in retailers, you're thinking of basic products that we all use. If you look down at the bottom there, just talk briefly about any of those. Home Depot, certainly when the pandemic hit, Home Depot, of course, the stock gets crushed because everything sold off, right? People were going to cash. So as Home Depot crashed along with it, well, that's, like Amazon. I think Amazon was the first clear buy, right? I mean, you could not go wrong when Amazon gets cut in half. And I think your second one was Home Depot, followed closely by Lowe's. If you like Lowe's better, that's fine. I mean, Lowe's stock kind of pretty much matches Home Depot. I think Home Depot, most people agree, I certainly do, that they're best of breed, so they get my money first. But you're not really wrong with either. You think, okay, people are stuck at home. They got home offices, all the home projects. You can't go out and socialize with folks. So why not put money towards the retailer? I've been at Home Depot at like 6:05 in the morning, right? So there's already like 100 people in the parking lot. It's kind of crazy trying to get stuff done before their workday starts, right? So kind of a no-brainer. Then you have Walmart. Of course, the mass retailer out there. It's a step below Costco, of course. Since Costco, you have to have a membership fee. Target charges you a little more per item because of they kind of target a higher dynamic. But we have specialty retailers like HEB here in Texas. But for the most part, Walmart is your like core retailer, right? And all the stories and jokes that go with it. That they're everywhere and their prices are pretty good. My kids and I joke that we didn't know there were other brands other than Great Value for a long time, right? Because we're Walmart shoppers and we always get the the generic, if you will, which works just fine. But we also have like dollar store stuff as well, and it's just the kind of people we are. It's kind of sport. You don't necessarily have to because of the money thing, but why not, right? Like try to get stuff cheaper. Walmart grocery delivery. I've not ever done that myself, but I can see that Apex is chiming in there. It saves them a lot of time. And we did the curbside pickup, of course, while everybody was doing the curbside pickup, right? We still prefer to go into the store and kind of do the traditional shopping thing, but we're old, right? So the younger folks may think that is the way to go, and may not miss the kind of walking around the aisles of Walmart, and I get that. Costco, totally different story there. I will say there is something going on at Costco. I think they're the first ones to do it. It always goes on. But so when you have this inflationary kind of thing that, obviously prices are increasing. Again, I don't think it's this huge deal like everybody else is kind of painting it right away. I mean, we'll see. But there's also something called shrinkflation. We don't normally talk about that. But since we're talking about retailers this morning, just peel that back a little bit. Shrinkflation is where you normally what they used was if like a normal roll of, say, paper towels has 140 sheets and it's, $2, that's an example, just for math. Now, instead of, increasing the price of that, they shrink it. Right now it's 120 sheets. So it looks about the same and the price is about the same. So at places like Costco or Walmart, you can really look at, hey, the prices aren't going up that much, but what's really going down is the volume is actually shrinking a little bit, right? So that's called shrinkflation. That was a new term on me. I should probably do a whole thing on that just because that's kind of a cool thought, which I'd never even thought of that before. Lululemon, they're just going to pass on any inflation onto their, a specialty retailer literally does not care because they can just pass that through to their very loyal clients. Amazon, of course, will just pass through. They get paid for the transactions. And then iBuy, if you were to get into something like that, you can really, that's traditional as well as e-buying. You think of Amazon, you think Alibaba, Etsy, those sort of sites, all those. I mean, we like to buy stuff. We're Americans. We do this. These are good investments over time. They don't go straight. They don't go straight up, and it's certainly not a straight line. But you kind of can't go wrong. You can get burned in specialty stuff because that's more trendy. So it can kind of run out of control and then reset. But as far as your big other names, you just really can't go wrong with them. All right, the flow for today: long, short, open, short, long. Really, I didn't put I only have 2 longs. Just go long Walmart today or short AT&T. Again, we'll talk about why here in a second. We'll execute the market open. Contingencies and academic resources are standard. All right, let's take a look over at where we've been in the market. Here's the S&P 500 on the TD Ameritrade Think Pipes platform. Again, pretty much straight up. You look off to the edge of the screen here, and a couple of, we had a little bit of a sell-off and kind of a little bit of a comeback. Yesterday was a little tiny bit in the red, and today, we're exploding back into the green again. So life is good. I do think that the mask off deal is really affecting everybody. They want to get out and they want to buy. When you want to buy, if you look at football tickets are insane right now. $500 to $700 for any of the football games because people just want to go. They couldn't go, so they're trying to. I bought concert tickets in Vegas for the 4th of July weekend for Dave Chappelle. I bought 8 of them because, client event, sort of that sort of thing for my local folks here in Vegas. But they had another one opened up the next night, so I bought 8 more tickets and turned around and they're for sale right now. Just crazy what people are going to pay to be able to get out and do things. And of course, been in Vegas for the past 4 days. As the mask came off Thursday night, Vegas exploded open. The trams are back open. There are literally people everywhere, just really celebrating being, Americans and unleashed, if you will. So a lot of positivity, and that's, of course, carrying over into the market as well. When you look at the 5-day, you can kind of see here, we had the big dip last week and then basically almost a full recovery and then kind of flatlining from there into the open today. All right, as far as our longs and short setups, I do have HG set up as a long. Let's say it's selling off a little bit there. And Walmart, but let's put Walmart long. You can take Walmart long. Let's put an AT&T short out here. We're looking at cutting the dividend, or it's not really a cut. They're spinning off a portion of their dividend, which is kind of unique. Tiffany and I have it off the screen here. What Gibson? What was her name? Debbie Gibson. Tickets. No, that's not true. These are Dave Chappelle. I grew up on the Chappelle show, so I would pay about any price to go see him, and am paying a large price to go see him. But that's neither here nor there. Let's go back to the headline of the day. So here's where we are with the futures. Refresh these real quick since they're blank right now. We turned flat after weaker than expected housing data. All right, these are, NASDAQ still up a little bit. So they were up a lot earlier. That's why things are selling off, if you will. All right, Europe, mixed. Asia, and the green across the board, 2% in Japan. See if anything going, Taiwan, 5%, man, in the green across the board there. Back here in the U.S., we already talked about. Bonds, again, that number that we're talking about for the 10-year for inflation, all that kind of as long as it stays below 1.8, that would be normal. If it gets above 1.8, then that would be concerning and spook markets out there. All right, oil selling off a little bit. Let's see, gold and silver are both up, and then get into crypto. the crypto deal. We didn't have a show yesterday because we were at a team breakfast, but crypto sold off hard on Elon Musk, what he said potentially about the energy use, and then potentially about selling, his own Bitcoin and Tesla's Bitcoin. Well, everything's screaming back now. You kind of walk back on all of that, but it's interesting how much he moves the markets out there. All right, here's your headlines for today. We got a couple minutes to the open. Walmart, of course, Walmart, Macy's, and Home Depot. I would never really buy Macy's. That's kind of the old retailer, if you will, not necessarily by age, but I don't like it nearly as much as some of the other mass retailers out there. Yeah, there you go, Burner. Thanks. Yep, Brittany. I've seen Brittany in concert probably, I don't know, 4 or 5 times. Probably done with that. Probably won't see her again, but certainly a high energy concert. Okay, we are getting distracted on concerts out here this morning. So Macy's robo sales aren't a short-term pop, so they think, of course, Macy's is back. Of course, Macy's would say that. If you haven't seen the one about the, hey, if you can hack our pipeline, I'm sure you can't hack our elections. Kind of joke, kind of, not necessarily a joke, but interesting that you would think, yeah, maybe that is true. Lamborghini, fully electric car by 2030. I've seen Lambos all over Vegas. They have I think they already have one hybrid and they're going towards a fully electric car. I'm not sure who would pay for a fully electric Lambo and then pipe in the noise. So yeah, that's enough on the headlines. They would better get over to TD Ameritrade to set up for the open. Yeah, pipe in fake noise into your Lambo. All right, good morning, everyone. Welcome to the On Time on Target play of the day. Coming at you live from Las Vegas. You can see it in the background there. We have 5 seconds until the market opens here on Tuesday. Stand by for the opening bell. All right, there we are. Futures were up green. It kind of turned flat lately, so you can see this is Home Depot. We were taking Home Depot long, but all of that has pretty much sold off, so we're going to switch over to Walmart long. What I really like is AT&T short, which is the next pane over. Get my typing done there. But as I'm not typing this in well, got a little bit of a delay, which is annoying when you're typing, right? So Walmart, go. All right, so we'll see what Walmart is up today, up 2.5%. Then you have AT&T here down 5%. Does fit our numbers kind of perfectly. So we're going to zoom in on this. Now the big deal is they had the merger with, gosh, I'm blanking on the media firm. Let's see if I could pick it up here. Put it in the chat if you know it offhand. So we want to take this short again, 30 cents here. So 29.92, 29.72 is kind of our entry point. We missed that. Let's go 29.60 short. So take it now, 29.60 short. Again, and I'll tell you I don't really want to use a 40 cent. We'll just use 29.60 as the entry point. Use a 25-cent stop. I really think this isn't either going to back up at all or 25. So make sure you get in this 29.85. Use it for the stop here. I'm on a smaller screen than normal, so my lines are not exact, which I don't like. I think this is a pretty clear short. I'll get the short arrow in here, if you will. So again, what's going on in AT&T? They, they had the big merger, and they just announced that the merger is now, they're going to spin them back off, right? When they spin them back off, they're going to spin off some of their dividend as well. Right now, they're paying a 6% dividend. If you will. So, whoa, did we just get knocked out of the trade? I think we did while I was, nope, that was just me. I was like, what's going on here on this smaller screen? Okay, I don't know why we're seeing this pop up. So anyhow, we're in the trade at 29.60 short. You can still take it here if you want. As far as the math, 25-cent stop. So we're going to be at 29.35, which is down here. And then we'll get to the others as the stock moves down. We'll kind of open back up. So again, AT&T short. We're in the heart of the window. That 5 to 10%. We've got that big negative headline that is ugly out there. So I'm happy with being in this trade. You can't buy MC Hammer stock. Discovery. Yeah, I should probably look that up real quick since I'm just blanking on the name there. kind of doesn't matter to our story. And my phone's frozen. All right, so we're not going to know that. So disregard. But anyhow, the potential dividend cut, of course, spooks investors. AT&T has been a house of pain forever. It really, really, really has. They have tried to do reinvent, recreate. It just does not work. It's just been ugh as far as pain. So we're in that trade to the short. Walmart long. I like it. You're probably not going to get a 3-hour move if you buy Walmart long here. Just not enough excitement in the name like you have with the AT&T short. So that trade's working. We're going to switch away from it. So if you're in the AT&T trade, go ahead and go out, put that on a separate screen for yourself, because we're going to leave it here and look at what's going on in the overall market. Okay. A couple of unique specific investments there are up over 5%. Palo Alto up a couple percent. That's cyber. Again, for cyber exposure, I should probably do another thing on cyber. I'm seeing Discover and AT&T. Those are the ones that are splitting apart there. That's causing the sell-off in the stock, right? Discover's up, AT&T is down, if I remember right. Well, I know AT&T is down because we're in short, but I think Discover's up 10%, if I remember offhand. Okay, the Nikola AVAV, that's a drone maker out there. You've got Costco up your 1.2%, so not a whole lot of things are up. Win, I've moved a lot of people into Win in the past couple days. All I do is win, win, win. That was based off of, I did that Friday morning for a lot of folks, and I think I added some more on Monday, yesterday, if you will. Here's the iBuy I was talking about earlier. So, all right, what else do we have here? Lots of names in the green a little bit. Let's see what's going on in the red world today. There's AT&T, 650. We know we entered the trade at around 5%. So you can kind of use this as a gauge. We probably needed to hit minus 9% to get our full 3R out of that trade. All right, SE is C Unlimited or C Limited. That's a tech firm. Don't know what's going on there. Coin selling off a little bit. Again, that's Bitcoin. That's the Coinbase, sorry, I've moved out of a lot of Coinbase. I will probably move out of more today. I want to take a harder look at it. I love their numbers, but the stock's not getting any love. And if, it's one of those, if the stock crushes earnings and sells off, it's like that's indicative of more problems there. All right. Sounds like there we go. Might be losing my light here. Mind Medicine selling off a little bit. Roblox, BioNTech, GBTC. So a lot of things are selling off there. All right, let's go back to our trade. We'll check that real quick. And my light, I guess, is officially dead. Might be able to save that while we're talking here. And USB, nope, can't. So it looks like we're gonna lose that light, so I'll just leave screen. All right, so let's go over to, here's our trade. All right, let's see, 29.35, 29.10 is the 2R point. I think I said 75 cents earlier. I misspoke. We're using a 25-cent stop. So you have 29.10 is the 2R point. So your exit point is going to be 28.85. So just keep an eye on it from there, and then we'll come back and take a look at it here in a bit. So overall, everything's going well with our trade. Don't see it backing up anywhere near the high of the day range there. All right, let's go take a look at inherited IRA rules. So a couple of different things go on with inherited IRAs. So, these things exist. And of course it's the, let's make sure you fund your IRA, make sure you do all that during the course of a lifetime. Well, when you're not around anymore, well, I should say, the life cycle of the IRA, right? So you fund it, and then now the retired minimum distribution age is 72. So you don't even have to take any money out until 72, and then you take it out over your life expectancy plus 10 years, I think is the formula. It's well over 100. So if you were to live to 110, I think that's when your IRA would actually find zero, right? You will have taken all of it. Well, if it's a traditional IRA, that's taxable for you. So that's a normal IRA. If you pass away and you have a spouse, it simply becomes your spouse IRA. Yep, easy peasy, just slides over. There's some age difference rules if there's a significant age difference, but for most people, it simply slides to the surviving spouse, becomes part of their IRA, and then eventually that IRA will be inherited by somebody eventually, and that's what we're going to get into. So kind of the, let's see, beneficiary IRA. So if you've seen these things titled, it'll be titled in the original owner's name, and then say for beneficiary or for benefit of, and then the beneficiary's name there. So there's a long title associated with these. Well, the way the old rules used to read is you would take this over, you would take the required minimum distributions over a lifetime. And if you have an inherited IRA right now, then somebody that passed away in 2019 or prior, you still have that arrangement. So you were grandfathered into that. Well, the issue with that for the government is if you're the beneficiary of an IRA and you're 18 years old, you are literally taking those RMDs for the next 80 years. And by delaying it, by spreading it out so much, you are not able, the government's not able to get their money, if you will. So they changed it so you have this 10-year rule now, so where you have 10 years to take it out. So regardless, if you are a non-spouse beneficiary, it comes down and you have 10 years to take it out. And here's where the confusion is I'm trying to see if there's a, there's the spouse for the rules for non-spouses. Let's see if they have a little chart here. Otherwise, I'll just tell you. Okay, I'll just tell you. So here's the line we're talking about is that in blue there. So you must cash out within 10 years, but here's where the confusion is. A lot of people think, okay, well, if it's 100, we'll just use the math. You inherit a $100,000 traditional IRA. Well, let's talk Roth first. You inherit a Roth IRA. Obviously, everything, the money that's been in a Roth has been taxed. So therefore, you, you can take it all out on day one and don't pay any taxes. Say it's 100,000. You can withdraw 100,000 on day one, and then you're good. Or you can leave it in there and get 10 years of appreciation through investing, and that will give you the, you have more money then because you've let it, if you stay invested for 10 years at 7.2%, your 100,000 is now 200,000. So then you can take it out then, or any combination. You can just take out money whenever you want because it's a Roth IRA. Doesn't matter. Now, where it does matter is traditional IRAs. If you inherit one of these, now as you take money out, it's going to cause you have to pay tax on it. So therefore, you could either take it all on day one and pay the entire tax, right up front, or you can wait the full 10 years, let the account double, and then you pay more taxes on the back end because the account has doubled. Or you can spread it out over 10 years. So what you really want to do now is take a look at your own income, and if it's fixed, if you're a teacher making 60K, then you're going to teach for the next 10 years, and it kind of doesn't matter. But if you are looking at, when you think of most people are inheriting IRAs from folks in their 80s and 90s, well, these now, if you're inheriting that, you're probably in your 50s or 60s. Well, you might be at that point where you don't work anymore. You're closing in on your own retirement, or you're cutting into, delay, where you're reducing your income because you don't have to work anymore because you're financially independent. So there can be a good tax strategy going into all of this. So that's something you definitely want to take a look at as you draw these these names. Hopefully you don't pay the early withdrawal. You do not. You simply just pay. That's a comment out of the chat. You simply pay the normal taxes that are due. But you can take it all out on day one, or you can wait till the end. It's from tax planning. So if you're going to retire in 8 years, then just let it sit there. Don't take any. And then as you retire, then now you have maybe, whatever your sources of income are, but your overall income is going to be less, right? Especially if you're a high earner, you're up in that, 200,000 and above area, then yeah, you really want to hold off on this. But the reason the government did this was so they can get their money out of inherited IRAs, and for those inherited IRAs to go away, come off the books, right? Because it is kind of confusing when people have several inherited IRAs because of all the different rules that are out there. So it's kind of painful, but that's kind of the rule on that. Okay. Let's see, but you need to know which rules follow in. Again, simple tax planning. You can either do it in Excel spreadsheet, which is how most people do it. Or you know, if you're working with me, I can run the different scenarios for you with the financial planning software that I have. All right, let's check back on our trade. Haven't heard anybody slapping high fives in the chat, so maybe the trade did not hit our trigger. So I said 29.85 is what we needed for the exit point. It indeed did not hit that, but it got darn close. There's probably, so here, this is a day trading thing. So it got really close to the 3-hour point. It looks like people started taking profits right around here just prior to the 3-hour point, or they got a better entry, even more likely. They had a better entry. I was talking, so I ended up 29.60 with my entry. If you got a 29.70 entry, then that was your 3-hour point, right? So again, a lot goes into the entry there. All you're seeing this is people closing their trades. What I predict to happen is in the stock, it'll back up here a little bit, but eventually once people are done closing out their trades, it will simply roll over and then establish a new low. So I would not exit this trade here. I would not kill it based off of the 4 minutes of green bars. You're nowhere near your entry point. If you get nervous, just set your exit price up here at 29.60 so you don't lose any money. But no real need to do that. This thing will go up for a while and then turn around and drop back down. So, all right, that's all I've got for you today. Thank you so much for listening. Tomorrow we are back at home operations with my home screen, so I'll have a lot more ability to display things than I do when I'm on the road. And then we're back on the road Friday again. So we'll have a show from Louisville Friday morning. So fun, exciting times. And with that, thanks again for checking in, and we will talk to you tomorrow. Bye.